Gold's been rallying pretty hard. So it's interesting to see that Bitcoin hasn't followed suit as digital gold, so to speak. I continue to view Bitcoin as a mix of risk on asset and digital gold. And so one of the things that we're seeing is despite gold having a $24 trillion market cap and Bitcoin having about a $2 trillion market cap, the relative underperformance over the past couple weeks as rate odds are being repriced is interesting. So that's something to keep in mind. And then something else that we're seeing interesting that I'm sure we'll talk about is the long dated skew, which has been positive or risk reversal skew, I should say. So the 25 delta call being more expensive than the 25 delta put. That's been a persistent theme for past 2 years. And we finally just dipped into negative territory where the 25 delta put 6 months out is actually more expensive than the 25 delta call. And so the way that I read that is I definitely think that the investor base of Bitcoin is treating it as a risk asset. And so the traditional equity flows of sell a covered call, maybe buy a protective put, starting to be priced in. And that really falls in line with a sort of structural decline in implied and realized volatility for Bitcoin. So both of those things going on. So it's an interesting setup in terms of digital gold and risk on and what we can do here in the space.